Helfer.
Very disheartening.
Here.
Alderman Nelson.
Here.
Alderman Hanneman.
Here.
Dennis Cheehee.
Here.
Member Howard.
Here.
You do have a quorum.
All right.
Pledge allegiance to the flag of the United States of America and to one nation, under God, indivisible, with liberty and justice for all.
Next item is comment period, since I don't see anybody else knocking down the door. We'll go ahead and close that and move on to approval of the minutes from September, October, and October again. All part of the budgetary process review. So I think those are in your packets. The first one is 3A, which is from September 30th. Anybody have any comments? Head around those. Otherwise, we'll take a motion to approve. So moved.
Second.
We have a motion and a second on the minutes of September 30th, 2021. Any further discussion on said motion? Hearing none. All those in favor?
Aye.
Aye.
Opposed? Motion carries. All those in favor?
Aye.
Aye.
Opposed? Motion carries. Subsequent minutes for October 7th. Pretty much the same. Again, meeting primarily including budgetary review. Included in your package is item 3B. Comments or suggestions there?
We approve.
Move to approve in a second. Any further comments? Discussion? Hearing none. All those in favor?
Aye.
Hearing none. All those in favor?
Aye.
Opposed? Minutes from October 7th are approved. Last, we have meeting minutes from October 11th. Last meeting, talking again about the budget proposed for 2022, including levy rates, etc. Listed in your packet is item 3C. Any comments or discussions there?
Move to approve.
Move to approve. Second. And a second. Any further comments or discussions? Hearing none. All those in favor?
Aye.
Aye.
Opposed? Minutes from October. Moving on to item number 4, I think it's a discussion regarding some authorizations and so forth on the proposed upcoming debt issuance. Paul, do you want to share some comments with us?
Sure. So this group last location in June. In the second meeting in September, staff took to Common Council a request to authorize 2 debt issues, a $2 million offering to fund the capital improvement program for the current year, and a $6.7 million offering, which was to fund 2 groups of projects: the sewer lift station, which was considered the same evening in terms of awarding a contract, as well as $3.6 million of project costs in TID 8. The TID 8 of project costs in TID 8. The TID 8 project costs were, or are, more tentative in that on September 21st, when the council considered the debt authorization, there was not a developer's agreement in place as yet. The debt authorization, there was not a developer's agreement in place as yet. And staff told council that if there weren't a developer's agreement in place and accepted by council or awarded by council prior to the debt sale, we would pull that portion of the debt offering. As I wrote this on October 20th, the developer's agreement had not yet been consummated. Earlier this week, that would be yesterday afternoon, and we came out of the meeting with a handshake of the outline of a deal. No agreement yet, but there's the outline of a business deal. the debt is scheduled to go to sale place later this week. So based upon what council was provided on September 21st, we would only sell the $2 million offering, which were notes, and the $3 million portion for the sewer lift station, and none of the today. Kind of not real happy about that because there are debt issuance costs associated with that. That's a little short-sighted, but there are debt issuance costs that we've essentially committed to. But we don't yet have a developer's agreement. And until you have a deal, you don't have a deal. Another option available to us is to pull sale and delay it 2 weeks with the anticipation that maybe the developer's agreement would be finalized between now and then, go to the debt sale at that point in time. If I had my druthers, I would say certainly don't sell the second portion because you don't have a long period of time. You got nothing to spend it on. So the issue before us is, what do we do with the second debt sale? We have to tell our financial advisors and other advisors what the size of the note is. We have to tell them soon. So if you concur with my recommendation, which is to sell only the sewer portion, or if you have some other issue, and then how do we deal with that in terms of what we told council at September 21st about how the debt sale was going to be offered?
What's the risk in delaying everything?
Was going to be offered.
What's the risk in delaying everything 2 weeks?
We asked bond counsel, or we asked our financial advisor a similar question. Are there any issues that they see with delaying it? He said issues that they see with delaying it. He said he didn't see any issues. And obviously the markets will be different 2 weeks from now than they are now.
But I mean, no big reports coming out from the Fed or anything that would.
Well, you've got Congress trying to decide if they're going to Congress trying to decide if they're going to
How many trillion they're going to
how many trillions of dollars are they going to spend, and the market will react to those decisions. Will there be a deal between now and that time? For you were last week's debt sales that Ellers did. So the first one, I believe, is a Minnesota school district bond. It's looks like it's about 15 years, and it was $12 million. That sold for 1.68%. Bond, again, about 15 years, a little better, from here in Wisconsin, 1.5%. Third one, $8.3 million, another Minnesota school district. I don't know the ratings on any of these issues. Don't show it on here. But again, 1.2%. So I'm going to guess that our debt, the notes will come in at the shorter end of this rate, probably 1.2, 1.3%. And the bond, even if it's a $3 million bond for the sewer, that's a 20-year bond, will probably come in the 1.6, 1.7% range. Ellers, when they did the 7% range. Ellers, when they did the pre-sale, was a little higher than that. They tend to be a little on the conservative side. So if we wait 2 weeks, the rates will be slightly different, not substantially different, but they will be a little different. And so the answer to your question, risk, but they will be a little different. And so the answer to your question, risk, not terribly great. I don't think they would want us to push it out a month. We'd either go now or we go 2 weeks from now. We don't know how long the Moody's came in with a rating today that affirmed our current rating of AA2. Moody's came in with a rating today that affirmed our current rating of AA2. Good news. I didn't expect them to make any change, but you go through the process, you don't know. So, remember, Alderman Hoffer, that's the best answer I can give you. Long-winded.
Just a quick follow-up, and what do you think the probability of 2 weeks providing enough time to get that agreement done?
Well, we've been talking to this developer for a year. They've been saying they want to go, and then they don't move real fast. They pulled a footings foundation, and they're working on that, but they've got a lot of site work to do, and they don't want to do that until they have a developer's agreement because of some things that the city's offering. So they want to get construction started before winter. I think they're motivated, but I wouldn't guarantee an agreement in 2 weeks. I would have answered your question if you wanted a percentage. I would have put it at 50% chance of getting it. How much better than?
I was going to say, I think I'm a little more optimistic. I would say at least 75. We have been talking with them for a long time. We came to a lot of conclusions yesterday, which we thought were coming. We were able to wrap up. We have a schedule on Thursday, myself and the city attorney, their lead attorney, to crank up the developers. I would say it's a high chance. Of course, council consideration. Best, right? The council, they have the developers in a good place by Friday morning, and then give the companies to.
Any other comments? Yes, sure.
And I direct this one to Rottenberg. If we were to push the sale out by 2 weeks, are there all the paperwork or whatever is needed for retirement at that time? Approximately.
We would proceed with, so the answer to your question is the sale that would take place in 2 weeks would settle after I leave.
Okay.
The sale that would take place next Tuesday for the first bond would occur before I
Before
leave.
you leave, any concerns about that?
I wouldn't
Okay.
be overly concerned
Okay.
about that.
So the original plan was to issue 8.7 million, correct?
Yes.
What is the timing anticipated for 22 quarter one water tower?
From the PSC, they told us in August they thought it would come in November. Still think it's possible. We've planned on going to bid in December or January. And so we would award a contract towards the end of Q1. And the question is, would you want to have the debt sold before you award a sale in the first quarter? If construction won't start until you get further along in the spring, so you might want to delay that contract award until sometime later, but you'd want to probably coincide the debt sale at the same time.
Right. Yeah, I was looking at this, and what do we expect the size of that one to be?
We're currently targeting that at about 3.4 million.
That's not.
There are two other potential requirements for cash early in the year. 1.7 million for 1.7 million for a project in TID8, which would be a taxable, so that's why it wasn't combined with this. This is an exempt, tax exempt, because it's public infrastructure. And another might be 2.5 million or thereabouts of additional needs early in the year. Or might be 2.5 million or thereabouts of additional needs early in the year.
Total, not 1.7.
Right.
A total of 2.
The water at about 3.4 and a total of additional 2.5.
The lift station, we're not going to have expenses here anymore. The lift station, we're not going to have expenses here anymore.
Not this year.
The lift station?
I would be so shocked if they did a draw on that.
You've given them a notice.
Right. But I'm just wondering, I wondered if there's a possibility. I wondered if there's a possibility to put this off, the whole thing off, until 22 early in the year. I don't think we're going to cash for construction purposes anymore this season.
Well, if you did that,
The sanitary lift sewers.
2.0, and you've got 6 points.
Sanitary lift sewers.
2.0, and you've got 6.7, and we're talking about 3.4 and 2.5. You now go over 10 million. If you stay under 10 million in both years, you do get some potential savings. It's not huge, but some potential. So by selling some this, you do get some potential savings. It's not huge, but some potential. So by selling some this year and some next year, you do get some potential savings. Now the question is, would the water be revenue bonds to stay out of your geo debt? We've been as we've had our discussions about debt,
Yeah.
geo debt is rising and we see more needs coming up. So maybe you want the water utility to do this on a revenue bond, which would be more expensive, but keeps it out of your geo debt limits.
And there's another option for the water debt that is, if we're high enough with the DNR, the drinking water program, it with more favorable. And we've applied for that.
That's the $10 million level, because we can stay under and be bank qualified, right? Am I
Right.
using the right technology? Get the right, I don't think, so on and so forth. I mean, issuance there, and I'm just looking at the timing of this lift station. I mean, it seems that's going to go for sure. That's contracted moving forward, but we haven't seen those yet. Also, I had a question. Don't we have some funds sitting, and these kids all start running together? But is it 6, the one down? Didn't we issue some stuff and anticipate their infrastructure, or did that all get caught up?
That all got caught up.
So that's been that.
So on that issue, if you want to see that summary, if you go to page,
That
so on that issue, if you want to see that summary, if you go to page 14 of the financials, which is later in your packet,
I was looking at that a little bit. And I couldn't.
I modified the page 14 from prior. I've now listed the debt that's outstanding in each of the TIDs as to the type of debt. So you see the GIDs as to the type of debt. So you see the geo debt, the internal advances, as well as municipal revenue obligations. So you're inquiring about TID 6. We've got 9.4 million outstanding in TID 6 right now, and all of that has been spent because you see no cash on hand.
Right. Okay.
And there's 1.5 million in 2022 spending.
That'll probably be later in the year.
I was just kind of thinking of cash was sitting something the other. I mean, typically, but I mean that's all going to be for infrastructure that the city is putting out there.
Yes, this portion is. It's street, substantially it's street money and a little stormwater money.
And there too, even if they're all going to get done this year.
It won't get done next year, but this year, but there's a really strong push to start the design, actually. Possible. But we're expecting to jump fast. Because the developer, I'm talking about the build, that road to do that is
Yeah,
You won't have bid it out by that time.
so when I'm looking at some of those, I mean, we could fund those if needed to be added to the reserve. Remember, I don't think the market's changed dramatically, although you never probably still has some benefit to really
Now, if you did the sewer piece and the CIP piece, that's 5 million. The other total was 8, 11, 13, 14 plus million. So if you did 5 this year, you'd have something just under 10 million for next year, with a portion of that potentially as clean water fund loan. So you would still be under the 2 million.
That'd be at the time that service time that public service gets.
We hope those will.
My next question is, even 8 million, would it be prudent to push it back anyway? We don't need the money now. Correct?
Well, you've ordered a contract for the sewer. You don't have any money to pay for it. You're talking about awarding a developer's agreement, which is going to then commit the city to doing something. It would make sense to it, which is going to then commit the city to doing something. It would make sense to at least schedule that debt sale. And so the sewer you need, that piece you need, and on the CIP program, you spent some of that money on projects and you haven't spent some of the money on other projects. Spent some of that money on projects and you haven't spent some of the money on other projects. But those are notes, and those you can move that money purpose around quite a bit. The bonds you can only use for the purpose that you state them for.
So the 3.6 would get pushed forward, assuming that development agreement consummate. Then the water is another 3.4, so that's 7 million right there, right, for next year.
Yep.
And then there
2.5.
2.5 we were saying.
Right. All the bankers on this group.
Well, the other part is, so you get too far into December, then the holiday. People are off and not active, want buying stuff they got in their portfolio.
Well, that's early December.
Yeah.
That'll make the markets go crazy the 2 weeks around it.
Yeah.
So November 17th or 16th is about as late as you want to go towards that December 3rd date.
Right.
It probably is important to note that a fair amount of our costs for the upcoming are already.
Yeah, well, that's, yeah, that I know. I just kind of look at it from the standpoint of sitting on cash again. Once it, a lot of this. And
I'm asking, whoever might know. Sign costs going for 8 by the end of the year. Because could we borrow that from?
Their TIDS money. Could we use it as a cash mechanism on a short term? Yes, but really when TIDS borrow money.
But I think the question effective. That's basically thousand.
That's going to require the budget amendment then.
I have the ability, the treasurer has the ability to invest money however, so we've done liberal advances, usually with notice to the council. We've done not for long-term basis without telling.
Other comments, guys? Councils, I mean, they obviously have authorized the sale. I mean, it's just pending now. Is there a use for it? And what do we, and the timing of it, I think, or that issue.
How much would we save?
Or we can answer
Oh,
that.
let
I
me
mean,
just pull that out of my
the prediction,
pocket.
the prediction is that interest rates are going to go up. So I would venture to guess we would not, by, you know, even if we have to sit on money for 3 months at the where the rates are now, saying on the short term, I would say but I don't think it's gonna be, they're gonna start with that, especially the storm piece of that project, very fast. I know they're trying to get the sanitary lift station going. We had to do quick moves on the council's perspective to move the project forward. And I think that we only extended that to, from only 6 days behind, gotta get moving sooner rather than later. There are obviously things that can and can't do, but I think the need is their project. If we want to do it tomorrow, you're at minimum talking from plan to issue, I don't think project.
I would say that your next debt sale will take a little longer rather than shorter, partially just because of staffing. It might add another 30 days to it.
Hearing then, it would be safer bet for us to go. Or
I would recommend you go 2 weeks now.
The 5 million or the 8?
I would do the 2 million CIP notes now, because you've got favorable interest rates and there's nothing that's money you're going to need, or you've partially spent. The sewer, you could wait 2 more weeks, and I would do that 2 weeks from now, and I would add, if you had a developer's agreement, the infrastructure into date. If you don't, then weeks from now, and I would add, if you had a developer's agreement, the infrastructure into date. If you don't, then you sell just the sewer money.
Oh, you're still talking about doing 2 sales, one on the 2nd and one on the 17th?
That would be my recommendation.
Aren't we gonna find more costs though? If
We asked that question today, and
aren't we gonna find more costs though? If
we asked that question today, and
really?
Those 2 deals stand on their own, because one's
That
bonds
sounds
and
odd,
one's
John.
note.
Yeah.
so the convenience of doing them together is just that.
Okay.
we would hope, against all hopes, we have a developer agreement at the for a vote on the 16th.
We were going to get council pretty close as far as getting all on the 2nd. So
Closed session preview of what the deal is,
Okay,
with the developer's agreement coming forward on this.
okay.
But the decision to sell the notes on the 16th would have to be made the prior week
Right.
that you're going to sale for them. Whether before council's had a chance to consider the developers.
Right, now that I didn't understand the breakup between, now there's there's no dilemma about the second piece. Either you have it and you include it, or if you don't, you don't. Right?
Right.
Everything else is set. Costs are there, market's there, offering, you don't, or you don't.
Yeah.
And it gives you 2 more weeks to dance and got a marriage.
Yep.
I mean, we had just played that game out and did 6. I mean, so that was all hurry up and go. We took a lot of money, and then it was hurry up and wait, right? Then it was hurry up and wait, right? I mean, you don't know. That was obviously other reasons, other circumstances. I mean, but if the developer is working with a client already and they want building up date certain, that's a different story. What you talking about already? Does that make sense? I mean, everybody understand that?
Yeah.
You got 2 dates committed anyway. All that is the second one you leave open for another couple weeks and see how the dancing goes, and if it's there, you throw it in. If not, you say, well, no.
Doesn't appear to be a loss or a risk, so why not?
Make sense? Any other comments? Questions? Any other comments? Questions? We should have a motion then to recommend that to the council. Split into 2, one on the 2nd,
Staff's going to have to proceed without council direction because we have to tell the market Thursday what we're selling them. So we will only sell the first note and push back the second sale until the 16th, with the 16th being at 3 million or 6.16, with the 16th being at 3 million or 6.7 million.
But you still need a motion to authorize staff.
Might as well, why not?
I'd be interested in a recommendation.
Julie, go.
Would be a motion to sell the 21A notes on November 2nd and a sale of the 21B bond for the sewer lift station and potentially the 3.6 million to date if a developer's agreement is being brought to the common council on the 16th.
It would make that motion as presented.
I'll second.
We have a motion, hearing none, all those in favor?
Aye.
Opposed?
Got one question.
Yes, John.
If we could go back to number 3A, and if I understand was already voted on, and this was the September, and I just have, I mean, if it's passed, and if I've got to bring this back to the next meeting, or if we can look at this now, because normally we skim over, this is what I do, you skim over the meeting minutes, and, you know, it's done, and I looked at it today, and I didn't until I kind of read in this a little more. Discuss this now, or is it something I have to request to go back to the next meeting?
You could move to reconsider if you want and then bring it back to the floor now.
Yeah, I would like to do that, please.
About the quorum?
Well, it's about, I have a few points in here that I'm looking at from the September 30th meeting minutes. If we can discuss it for a second.
Sure. So I hear there's a motion on the floor to reconsider.
Second.
Any further discussion on September 30th? Hearing none, all those in favor?
Aye.
Opposed?
Okay, so my point 4, Alderman Nelson left the room, quorum was lost. Okay, when you hear that, I get it as I got up, left the room, meeting was done. Okay, like my actions caused the meeting to end. Then you look at the bottom on point 6 under adjournment to end. Then you look at the bottom on point 6 under adjournment. Meeting ended when quorum was lost at around 5:45 p.m. when Alderman Nelson left the room. Now that was the night of my town hall that I hosted and had to attend and run. And my belief at that point in time for the meeting, was I thought we were, I mean, I wouldn't have just left and vacated a meeting in midstream. And what I'm looking at is if anything could be added to this, to the reason why, because I don't miss meetings ever, and I don't listen, I understand commitment when I took this position. I don't miss meetings, I attend them all, and there's a reason, and I'd like to see that reason listed here as to why I left was to run my town hall meeting next door at 6 p.m. As to why I left was to run my town hall meeting next door at 6 p.m. Not that I just felt like, oh, it's 5:45, I want to go get a candy bar, the whole meeting's done now. I mean, there's people that have missed meetings that miss them regularly just because. I mean, I don't. I understand the commitment. That miss them regularly just because. I mean, I don't. I understand the commitment, and it's a very serious commitment. But I'd like to at least have that amended on here or read in or something, because this is what's going to be, it could be a year from now where there may be an important election coming up, and, well, you just decided to get up and leave and get a candy bar? No. There's a reason there'll be an important election coming up, and, well, you just decided to get up and leave and get a candy bar? No. There's a reason why I got up and left, and that was to run a town hall meeting.
I'm aware of it. I read it, John, as well. Obviously, I know the reason why you, but part of it might be feeling of, or what's the right privacy purposes, if you want.
How about factual?
In your case, maybe you want that.
I do want that. I'm respectfully requesting that be put in there, that the reason why I left the meeting was to go and run my town hall next door, not that I just decided to get up and end the whole finance committee meeting.
Well, and we had anticipated one more member being available so that your needing to leave that evening would not have been a quorum minimum requirement. Obviously, that didn't. Another event that night. Further comments about amending or adding that notation? Maggie?
I would say it would be very. I don't think it's necessary to talk about why the quorum was lost or anything like that. I would just say, in parentheses, their quorum was lost, and the quorum was at 5:45 p.m. It just happened. The only reason I say not to add that with a reason in is that's just.
But right here, I guess my argument is when I look at it, it looks like, well, Nelson got up and left. I didn't care. When I look at it, it looks like, well, Nelson got up and left. I didn't care.
I'm sorry. Delete that part. Alderman Nelson left the room. That doesn't even belong in the minutes, in my opinion.
Well, then under 4, Alderman Nelson left the room. Quorum was lost.
Same thing. I would just say quorum was lost. Forget about everything else.
That's fine. Or add it in there. I just want to make sure it's transparent.
Forget about everything else.
That's fine. Or add it in there. I just want to make sure it's as transparent as possible that there was a reason, not just.
So what I'm hearing is the recommended change to the minutes on October 7th under
September 30th?
September 30th.
Oh, September 30th.
September 30th.
Point 4.6. 4.6.
Point number 4, the last sentence. Here, one more back. Or no.
This is September 30th, item
Sir.
4. Alderman Nelson left the room and then just say quorum was lost. So we'll just say, with strike, Alderman Nelson left the room and item last.
Period.
And item.
Delete that whole part. Just keep it as adjournment.
When the quorum was, do we even want to say when the quorum was lost?
I guess I wouldn't. Or I would request that it
Yeah, period.
done.
Yeah.
And I'll make that motion.
I'll second.
We have a motion and a second for 2 amendments to the meeting minutes of September 30th. One being in section 4, the meeting Alderman Nelson left the room, and last phrase after the note of 5. Any further discussion on the motion? Hearing none, all those in favor?
Aye.
Opposed?
Thank you.
Patience.
Appreciate it.
Move to reconsider the minutes. Move to reconsider the minutes of October 7th, 2021.
Seven.
Item 3B.
Well, there's item 3, approval of the minutes, then it says motion made by member Howard. Is that what you're referring to?
No, I'm asking to reconsider the approval of the October 7th minutes.
Oh, which is item 3B on our agenda.
3B on the agenda, yes.
Okay.
I'm sorry. I wasn't clear, my apologies. But in consideration of Alderman Nelson's concerns on the first set of minutes from September 30th, I'm just for some of the timing that's in there too. But we don't have a second.
Second.
We have a vote.
We have a first.
So the motion on the floor right now
Yeah.
is to reconsider your October 7th minutes.
Okay, any further comments on reading October 7th? None, all those in favor?
Aye.
Opposed?
Okay.
Sorry, what are we looking at doing with this?
Well, and I'm just on the previous minutes, because if you look in item 4, where we say Alderman Nelson left the room at 5:15 and rejoined at 5:19, then we took a break. And then it says up above that you left at 5:40. So I'm just would like to suggest a different wording.
I do. Boy, interesting. So how about item 1? Okay, if it says I left at 5:40, when did I return?
You didn't come back to the meeting.
On October 7th.
Correct, because the meeting then went on and adjourned at 6:43, but you did not.
We had additional.
We had a
Yeah,
quorum.
quorum anyway, so
Yeah.
Okay.
make any difference.
And to note, when somebody left, as far as I know, is standard procedure.
Yeah, it's factual.
Right.
I think it was a phone call on that.
5:19 was a phone
Right,
call. I
correct,
believe.
exactly.
But now we're talking about the alderman left at 5:40.
Well, I hope we're all paying real close attention from here on out. Good. Great. Sounds good to me.
So is there anything that we want to reconsider here, or
I don't
it's good as
Because I can
consider here, or
I don't
it's good as?
because I can honestly, I don't recall if I left at 5:40. I don't look at my notes here, but okay, I'll take your word for it. It's fine.
Okay, then I will move that the minutes of October 7th, 2021 stand as previously approved.
Second.
That the minutes of October 7th, 2021 stand as previously approved.
Second.
We have a motion and a second. Any further discussion on the reconsideration of October 7th? Hearing none, all those in favor?
Aye.
Opposed? Motion closed in favor?
Aye.
Opposed? Motion carries. Moving back, I think we're next up on financial statements for September. Correct?
Maybe you want to look at item 5?
Oh, sorry about under here, yes. Tax collection.
So-
Nobody cares about that.
There's a situation, I guess is the best way of putting it, that's going on right now, and I felt it was important that this group and the council be aware of it, so that's the reason I wrote this up. The city is, after the levy is set, and we bill them out in early December and collect them over a period of time. We have an agreement with Milwaukee County that we will use a particular piece of software that they also use, so that when Milwaukee County purchases the unpaid real estate taxes, we can transfer files and they can pick up the collection process. There's a certain amount of efficiency that takes place with that, which is fine. And in connection with the city agreeing to use that software, Milwaukee County pays the annual maintenance fee or annual license fee to use the software. Last year, we billed a little over $100 million on that program. Milwaukee County, the vendor, the software provider, has decided that rather than it be software which is resident on city servers and city PCs, they would prefer that it be a cloud piece of software, and that we migrate from our current server-based software to their cloud software. That announcement came to us from their cloud software. That announcement came to us from the county treasurer in June. The software vendor had a meeting with all the finance and treasurers of the county, exclusive of the city of Milwaukee, which is on its own, in late August. And they said, well, they would like everybody converted by the 20th of October. Then we heard nothing. In early October, the vendor came back and had another meeting with us and said, we lost our team lead and version, but we would still like everyone to convert in December for the collection. So the way they've now laid out this process, we will calculate taxes and prepare tax bills under the old set of software that we've all been, and then the software vendor will port those bills over to a receivable system on the cloud-based software, and all the communities will use their treasury offices to collect using the cloud-based software. Here we are on October 22nd of this for anyone yet. We don't know who's going to control the users that are on the software. We don't know how the LandNav folks are going to take our personal property taxes, which we are still responsible for collecting and have outstanding, and they're going to convert that over. There's a lot of questions that haven't been answered. Early December, they want us to be live with the new system.
What could go wrong?
And remember, this goes to all 14,000 local property owners, many of whom are voters and residents. And if things don't go right with that, who's going to hear about it?
Every one of the calls.
So add to this stew, Milwaukee County has also mandated that another piece of software, I think it's in the public safety area, but I don't know the specifics, that they want all the communities to convert to that, and are not happy with that conversion. And the public safety folks have said it's not ready, even though it was scheduled to go live like now. So the IT directors are now looking at this mandated system from the county treasurer's office. Several of the finance directors have gotten together. We had a Zoom meeting this afternoon with all but 3 of the local community treasurers and finance directors, and every one of them is saying we would like to push the conversion of the collection back beyond. They're saying we would like to push the conversion of the collection back beyond our heaviest and most busy season. Because the other thing I didn't mention, and I know I'm painting a picture here that everything is terrible. I'm just saying there's a lot of risks. Because it's a cloud-based software, only when a city's internet connection is working can we collect any taxes. We've had some issues with internet connection the last few months. Our service provider has provided spotty service. And say we can't collect right now if this goes down. And we have arguably 6,000 to 10,000 people who showed up at our counter between December 10th and December 31st to pay their taxes.
I do.
So I wanted to give you a heads up that the county and LandNav, the LandNav have lost several key personnel with it since September 1st, who are all key in making this stuff work. So several of us finance directors are giving them pushback. I'm not asking for any action, but I'm trying to alert people to the fact that this is going on.
Without any training, how do you step into the busiest 2-week period of the year and not have your personnel trained? And every community would be the same way.
Yes.
I mean, it makes.
And you won't be here.
Well,
Troubleshoot.
but my deputy treasurer, who is the one who's been supervising all of this and does a good job, would still be on site. So I mean, nobody's irreplaceable, and there are people here. And there's someone else who has experience with this software who's not too far away.
Okay, good to know.
But that doesn't mean that there aren't a software who's not too far away.
Okay, good to know.
But that doesn't mean that there aren't a lot of uncomfortable people right now with what's going on. And I only know the accounting side and the internal control side. The IT folks are also raising their own issues about this software change. So, again, I wanted to just bring everybody up to date on what's going on so that if the phones start ringing, it's not like, why did I hear about this?
Why is Milwaukee?
Well,
For a lot of reasons. Milwaukee doesn't turn their property taxes to the county. That's the main reason why they're not part of it. Right, so everybody else in the county, because the only one that can take property is the county. So everybody else in the county, and that, Nick?
Why are they treated different?
I'm not sure it's a favorable thing for Milwaukee. I believe the long history on it is the county doesn't really want to.
Only one.
Correct. One cities, there's other avenues for Milwaukee to deal with, but the bottom line are
Well, it appears like this probably hurry up and wait to do all of that in the busy periods. Aggressive.
Milwaukee County's involvement with collection is the leftover. So the city of Franklin bills $100 million. Last year, we turned over 550,000 unpaid property taxes. We turned over 550,000 unpaid property taxes. And it was less than 1,000 parcels, probably less than 500 parcels. Now, we are a unique community. We don't have the same kind of problems other people have. But Milwaukee, other people have. But Milwaukee County is not running into 4,000 people standing at their counter waiting to pay taxes, or having to open up 5,000 pieces of mail today, or lock boxes, or credit card payments, or anything of that nature. So I don't think they appreciate necessarily what we deal with when we deal with all of our residents. At the same token, I don't know what they deal with in terms of collecting from the people who just refuse to pay their taxes in a year's time. But it's not 14,000 people. It's probably several of the same parcels year after year that are involved. There's not been a lot of communication between the treasurer's office downtown and our offices. There's at the staff level, we have to send a bunch of reports, and so the staffs work together fairly well. And since we're on the same software, that was transfer just fine. But we don't know what's driving this change to the cloud. There's speculation as to what it is, but we really don't know. We don't know if it's coming from the software side or if it's coming from the county side. The county is on the web-based product already. They will have access to all of our files. All throughout the year. That may present some new issues that we haven't had to deal with in the past. Okay, so there's risk to the city as well, but again, I think Milwaukee County's holding a lot of the cards because our maintenance agreement is being paid for by them, so our tax levy's lower, we don't have that cost. If the software vendor says we're not going to support that software anymore, that's a problem.
And it probably is a cost. I mean, they can manage it on the cloud. And it probably is a cost. I mean, they can manage it on the cloud. They just do it once, and that's software kind of trying to.
But I also think this software vendor is going to have a resource problem in terms of dealing with 18 different communities who are all converting at the same time. And we're all going to be calling and asking similar kinds of questions. So if we would convert at different points in time, they could concentrate their resources on a smaller group of people who are having issues, and then you get them come along, or a next group of people come along. So again, if I didn't say anything to you and you started getting phone calls, you'd say, well, why didn't somebody tell me this is going on? This is an effort. I'm not looking for a whole lot, but I wanted to tell you it's happening. And if you had some recommendations or some suggestions, I'm open.
Here at November 1st. I don't think it happened this cycle. But you will keep us abreast, right, Peggy?
This action sheet, I think full council should be aware.
Sure.
The county will just tax holiday.
Well, there are probably some of the taxing authorities who need that money. Some may even have taken in anticipation loans.
All right. Thank you for that information. Next we have OPEB.
So, as you recall, some of you recall, but Alderman Hoffer, I know this is somewhat new for you. The city maintains an employee benefit program which covers health insurance for people who retire before age 65. Public safety is the primary group that benefits for this because they can start retiring at as early as age 53 and qualify for this program. Okay. The city of Franklin is unique in the state of Wisconsin in that we have a trust with assets in it to pay these benefits, and our trust is substantially fully funded. So we have sufficient assets on hand right now to pay the benefits for the most part. Okay. When my predecessor left the city, also fired the investment manager for the portfolio, and I've been managing this equity bond portfolio since I've been here. Because I'm managing it, and it's an unusual situation for staff to be doing that, I provide regular, I think the committee would say, updates on what's the performance of the, by investment policy, using indexed ETFs and short-term bond funds in this portfolio. And what I present to you on a regular basis is what's the current status of this. So on the investment management, what's happened to the green dots going across, that's total assets. The red line is what's going on with the equity portfolio. The light blue line is the fixed income portfolio, and the purple line is whatever cash is in the portfolio. So you can see what's happened in the more recent time frame. There is this, we made about a $400,000 contribution in late 2020 that raised the assets, but then we just saw the stock market go crazy, and that's why it went up. On the top of the next page, I show we have an investment policy that says no more than 65% of our 25% of the equity assets can be in equities, and no less than 25% of the assets can be in fixed income. And so you see two lines going across the page. Those are the investment policy. Early when I got this, interest rates were such that Common Council gave us permission to be outside of those parameters. But I moved us back fairly quickly to be within the parameters, and that's where you see in 2015 and then by 2017 we got us clearly back within the parameters. But you see here what's going on. On the top of the third page, parameters. But you see here what's going on. On the top of the third page is the bond portfolio. I bought what are called bullets. These are the 2025s. It's a group of corporate bonds, if you will, all investment grade, or bonds, if you will, all investment grade, or substantially all investment grade, and they all mature during calendar 25. At the end of 25, the investment manager returns all of your capital to you. We typically sell them about a year to a year and a quarter before they mature, because as they go into short-term maturity, you don't really earn anything, and the return on that portfolio drops dramatically, so we sell it off. And we do have a bit of a fund that's got a short-term bond fund. That's the FLTV. At the bottom, we show what's been the allocation between the various equity positions. We have got 65% of the equities. We have a mid-cap fund, that's the red line, that's generally running around 15% of equities, so it's the left scale. The blue line is the international. In the 2017-2018 timeframe, we were pretty heavy in anything, and we got it back. So now we're trying to target about 10% of international equities, and we have about 10% in small caps, and we're trying to keep it at that for the more recent time frame, and that's what you see there. And Nothing untoward's going on. You're substantially fully invested. There's no cash in the portfolio. And I'd entertain any questions if you have it, but here's what's going on. The city would most likely want to hire an outside investment manager to do this once I leave.
We have not
That was
really,
my next question.
we have not really had to tap.
Have
it.
not, but when we get the actuarial report, we ask the actuary as to what are the expected claims for the next several years, probably goes out 15 years, and what are the expected required contributions. And if there's a shortfall, that is where I typically have in the past tried to, so I would say in 2027, we have $400,000 of cash coming to us. But that should cover all the claims plus whatever we're contributing. There'd be plenty of cash and you would never have to liquidate equities at that point in time. So if there were a market downturn, you'd have sufficient fixed income. Manage it a different way, but that's how I tried to manage it. And with interest rates so low, we've not wanted to extend the bond portfolio too far, because if you lock in something 10-year money and it's real low, when you get to year 5 and it's still low, you're going to lose a fair amount of money on that portfolio. So we've kept it relatively short in terms of the bond portfolio. Amount of money on that portfolio. So we've kept it relatively short in terms of the bond portfolio.
Other questions?
I've been reading a lot of articles lately that the 70-30 mix doesn't work anymore.
Well, we're using 65-35. The pension program was at 60-40. We also moved that to 65-35 about 2 years ago. Yeah, I've been reading things that 60-40 doesn't work 2 years ago. Yeah, I've been reading things that 60-40 doesn't work.
I've been actually reading things about nothing works with bonds.
Well, how long will bond ratios stay this low? It's anybody's guess. But, the 10-year moved from 100 basis points a year ago to now we're at 160 basis points. And if the Fed turns off the bond buying, I think you're going to see interest rates rise even further. I'm hearing some of the stuff I'm reading.
Losses on bonds, so that's the problem.
That's why we're keeping it short, so we should. So I'm hearing interest rates could be 225. 10-year could be at 225 by the end of next year. Which would mean short-term
wild
rates.
card if the pandemic levels don't really.
Well, you also
That's right.
you could have inflation, and if inflation really goes up, longer-term rates will rise because the market won't want to take negative returns. And again, the reason why we're keeping this portfolio relatively short. Which brings us.
OPEB report.
Pardon me?
When's the OPEB report?
They were targeting the middle of November. When I talked to the actuary about a week ago, he said he's still on target with that. Now he'll have the liability done. He will finish his report in early January when we know what the investment assets are, so he can complete the net. When we know what the investment assets are, so he can complete the net position. But that's just plugging in an asset number.
But the key here for the alderman, city president, that obligation long-term for city workforce, but there's asset for city workforce, but there's asset to cover them.
So if you look at the employee benefit programs, WRS is very well funded. We'll call it 100% funded. Our public works pension is now substantially funded. A year ago, we got to $57,000 underfunded on a $10 billion liability, so I will call that substantially funded. And we made an extra $300,000 contribution this past year, and the markets have done real well this year. So that fund will probably be overfunded in the short term. And our OPEB plan, we showed last year $8 million. I didn't bring my CAFR with me, but we're now at 8.6 million in assets. So we should be fully, if not a little overfunded in that program. And all of our, we have no unfunded long-term employee benefit programs of any kind. That's a good place for a city to be, and not every, they won't always do that way. So everybody should, just because we're that way now does not mean, but you shouldn't see a 20% decline in your total portfolio. So we'll stay in the 90% plus funded ratio, and that's a great place to be. Okay?
Now I think,
Again, because we have Alderman Hoffer and you have not necessarily had the opportunity to look at these in any detail, spend a little more time. There's a cover memo that just speaks to each fund, and on the bottom of the first page, I always provide you what are the cash balances in the various categories of funds. And when you look at the city, we have a general fund, which is, we have a debt service fund. You collect the debt, you tax levy, and then you use it, pay your debt service, and the cash goes away. We have TIF funds, and depends on where you are in your borrowing and your project costs as to what its cash balances are. The non-major funds, for the most part, are our capital funds. So it's the fund and the various capital funds. Within the capital funds, our equipment replacement fund should have somewhere around $2 million as a fund balance in it. So that's why this fund tends to have a fair amount of cash. The other special revenue funds typically don't have meaningful balances. You can show you what's there. Then we have a sewer fund and a water fund, and that just depends on where you are in your billing and collection cycle on your quarterly utilities. The self-insurance fund has been carrying about a $3 million balance the last couple of years. And then the tax fund depends on where you are in your collection cycle and your settlement cycle. Tax fund depends on where you are in your collection cycle and your settlement cycle. But we present that. In the middle of the central page, I talk about what's going on with landfill siting fees. Landfill siting fees are broadcast across a number of funds, primarily capital funds. Across a number of funds, primarily capital funds. But it's hard to see what's going on with that, so I present this, which is the total landfill siting collections, and how does that relate to the budget. The dotted line is what we expected to have happen by way of budget. The blue line that you see, which is real jagged, is the have happened by way of budget. The blue line that you see, which is real jagged, is the monthly collections, and you can see it's somewhat variable. Some months it's real high, some months it's low. The red line is a rolling 12 months. So it says if you add up the last 12 months of collections, what has it been? And you can see for about 2 years now, we're at $1,000 a month, which is the better part of $2.5 million. We budgeted $2.1 million for this year, and we budgeted $2.3 million for next year. Early last year, I got really nervous because the collections dropped dramatically. And we thought we were going to be in a real world of hurt. We were fine. I got nervous. Council got nervous with me. Maybe I yelled fire too loud, but gave people a heads up. Then I present a description of each fund and what's happening in the funds. But I'll then take you to page 6 of the report. Under the tourism.
yeah, that Ballpark Commons, is that just?
No, it does. The Tourism Commission had planned in 21 to share an employee with Ballpark Commons that was going to promote tour signed, and that employee was never hired.
Okay, so we were gonna.
It was going to be a city employee, and Ballpark Commons was going to pay the city their share of that cost.
If I may, a person was hired. And 3 months maybe, but,
Never was on the city's payroll, and the
no.
Tourism Commission never paid anything.
No, and I'm aware of that. I worry that Ballpark Commons may suddenly pop up with a bill for half of what they
We
paid
were
that
told
person.
no.
You're told no. Okay, great.
He said their investment was around 60,000, and that they have no any portion. It was last week.
Okay. Good to know. Thank
I had not heard that, so that's good information to have.
Well, it's not in writing, but it's,
you.
Well, there's no agreement between the two parties either at this point. So maybe we got the cart before the horse a little bit, that one. I present to you, which is also in the CAFR document in a little bit different detail, but this says where the city's cash is, which fund is it in, and which investment manager has it. we have two portfolios, if you will, Alderman Hoffer. One is we call our reserve portfolio. It's to hold the money that we really are going to hold as our rainy day fund, never really dip into it or spend it. That has been managed by Institutional Capital Management. In other years, that portfolio had $18 million in it, $20 million in it. And it's invested in treasuries. State law doesn't. When we subtract the investment manager's fee, we could do better by buying CDs through ADM. So we moved a lot of the money back to ADM. And until interest rates rise, we probably won't go any more money back to Institutional Capital Management because it would cost us money to do that.
They charge on
To do that.
They charge on a percentage basis.
They charge 15 basis points.
Wow.
So the local government investment pool is sort of in a last minute emergency. We rarely put any money in it. We rarely take any money out of it. Then American Management Deposit Company out of it. Then American Management Deposit Company is, are you familiar with a program called CDARS? A lot of people are. Okay, so American Deposit Management is a CDARS type program, but they will vet the banks that they work with. They have a stable of about banks that they work with. They have a stable of about, what am I hearing about? They can take upwards of $45 million of ours and all of it be FDIC insured. Then they also then have agreements with a couple of banks where they've bought separate insurance on that bank. Agreements with a couple of banks where they've bought separate insurance on that bank. And then we can put in more money that's covered by that insurance policy. And then sometimes they get banks to provide collateral, which allows us to put more money there because it's fully collateralized. So we have a couple of banks that with American Deposit Management that are in the $4 and $5 million list. So we have a couple of banks that with American Deposit Management that are in the $4 and $5 million range because of those collateral and insurance products that are out there. But this tells you where the money is. And then at the bottom of the page, if it's in some type of time deposit, I show the maturities of those times. If it's in some type of time deposit, I show the maturities of those time deposits. So you can see that here. We have $28 million of on-demand cash at the end of September. Plenty of money for us to deal with any kind of short-term needs. Now, not all of it is in the general fund, short-term needs. Now, not all of it is in the general fund, some of it's in other funds, but you get an idea of what's going on. Okay? Then we present the general fund. Story in the general fund is resources are pretty much what we expected. Expenditures are running a little less than we thought. We would expect to end the year with a pretty close to break even that's been authorized. We might be a slight deficit, which really uses up some of last year's surplus, and that's what council authorized. The next couple pages give you more detail on the general fund. I don't want to spend a lot of time unless somebody has some questions relative to it. The next major fund that we have is the debt service fund, which is presented on page 13. We tax for whatever our debt service is. We pay the debt service on the 1st of March. It's an in and an out. Okay? Then we have the TIDs, which combined make up a single fund that's presented in our annual financial report. But on page 14, I provide a summary of each of the TIDs. You see a balance sheet. Now I list the amount of outstanding general obligation debt by TID, as well if we've got internal advances. I list that by TID. And then if we've issued municipal revenue obligations, which are the legal structure related to what's known in the marketplace as a pay-go. Sources to satisfy that obligation, which in nearly all cases is subordinate to the general obligation debt. Not always, but generally speaking is subordinate. Do you have to make those payments? Okay, and then below it you see the resources and expenditures by TID. Let's look at TID 3. In TID 3, you see there's $1,375,000 in outstanding debt. See that underneath the balance sheet there? Last year, the resources into that TID was $2.6 million. Most of that is recurring revenue. So in 2022, we can pay off the $1.3 million, and that TID should close. That's the way you want to look at this. In TID 4, we have $1.3 million in outstanding. Our revenues in 2021 was 1.3 million. So we're right on the cusp. If we get what we need, if we collect enough, you can pay it out that TID can to make sure you've got things covered. And that's the way you want to kind of look at this. But then you go out to the more recent TIDs, we've issued a lot of debt in them, and it's early in the TIDs, and we just haven't gotten to a stationary point in terms of annual revenues coming in. Then I present an actual to budget page for each of the TIDs that's available. Then on page 21, we start talking about the special revenue funds. American Rescue Plan, the city received 1.8 million from the feds related to the CARES Act or the American Rescue Plan. We're going to get another $1.8 million next year. We haven't really spent any of that money yet. And we present that just to say what's going on. Common Council doesn't have any control other than how much money is given to the library, and whatever employee programs are out there, substantially all of the library personnel are subject to those benefits or those programs. Tourism Commission, because the Common Council controls who's on that board, we present their financials, but the Tourism Commission adopts its own budget. The Tourism Commission gets approximately 70% of the hotel taxes that we collect, with the city 80% of the hotel taxes that we collect, with the city getting the first 30%. So once we get our 30%, or what we've collected a few years ago as a cap, then the Tourism Commission
But
gets
that's
its money.
declining over a period of.
We are now at the lowest point on that, so we get to keep 100.
Over a period of.
We are now at the lowest point on that, so we get to keep $151,000 a year in the general fund. That will start rising. We can get 30% of everything we collect, or 150,000, whichever is greater. If we add more hotels, then the general fund will start bumping up a little bit. Solid Waste Fund, that's your garbage collection fund. We generated a small deficit last year. We budgeted a small deficit this year, but there's nothing unusual going on in that particular fund. Capital outlay, this is where we buy our equipment, desks, computers. Things are moving along there pretty much as expected. Same can be true for the equipment replacement fund. Street improvement fund, again, nothing unusual going on. The last of the state shared revenues will come in on the 1st of November, and that's when they will be fully resourced. We present the fund, but this one we also present page 29. Page 29 lists all or substantially all of the projects in this fund. Some of the projects have resources that are dedicated to that project. So we present the amended budget, expected and resources associated with that, and then the net spending of the city. Just a second, John. And then next to that, we present the actual activity. John.
Going back to the street fund, did the state ever bill us for 7th Street?
Not yet. So when TID 3 closes, a decision will have to be made is, do we hold back what we're holding for that for some future distribution to the taxing authorities? Or do you want to roll the dice, distribute all the money, and if the state comes back and bills you more, well, then the city's got to come up with all of it. That patient has told us they're completing an audit. They told us this back in the first quarter. And they said, according to their records, they think they owe us $25,000. We think we owe them $800,000. We're waiting for the audit to be done. I believe what happened is the Department of Transportation changed their computer systems and their accounting package in the year this project was being completed, and their records got screwed up, and they forgot what they thought they were going to bill us. That, or our engineering department grossly overestimated the cost of what we were having done. One estimated the cost of what we were having done. One or the other.
Where would you park those funds if you were setting aside for?
They're sitting in an investment account getting about 30 basis points right now.
But I mean, once that it is closed, and you want to say, well, they may come back for that payment, We just leave it where it's at, or?
Well, I won't be here,
Well,
but what I can tell you is that when we closed TID 2 back in 2012, there was $500,000 that was held back in a separate escrow account, set aside to pay for some additional project costs that we knew we had in that TID that had been programmed. There was a pile of earth sitting there that had eventually, we said it was going to take $500,000 to deal with that. We held it back, so we didn't distribute it to any of the other taxing authorities, closed the TID, and then about 3 years later, one of the developers in the area said, well, I'll move that dirt pile for you, but I want that $500,000. Distributed the $500,000 to done. If he had agreed to take only $400,000, we would have taken the last $100,000 and distributed it out to the other taxing authorities based on however we did the final distribution. So that's, and I've heard other people say, our auditors say they've seen that done in other TIDs as well. So if you have monies that you think the TID are going to distribute whatever else is available. The real question is, where the portion that does come back to the city, what do you want to do with that money? That becomes the other question. So 29 just shows you where we are in various projects. Now, you'll note under the amended budget various projects. Now, you'll note under the amended budget column, $1,458,000 was debt proceeds that were supposed to come into this TID to cover some of the project costs. We still have $1.5 million in this fund. We're going to get the $1.5 million when we sell this in this fund. We're going to get the $1.5 million when we sell this debt. These projects, still have to get started and done, and then we will use those proceeds. The development fund, that's where we, on page 30, that's where we collect the fund, that's where we, on page 30, that's where we collect the impact fees, and then as various projects get done, they move out or they move over to the debt service, and now, because the debt's been retired, we can then begin to move some of it out. On the page 31, of the 9, we're now describing which impact fee does that relate to. So you see the collections for this year, the collections in prior years, how much is on hand by impact fee, $5 million in parks and $3 million in water make up substantially all of the money. When it gets built, we'll use up nearly all of that $3 million, and the parks, we hope, get used in the not too distant future. Utility Development Fund, this is where we collect special assessments or connection fees that are coming in. We've got $2 million, $2.7 million in there, up a fair portion of this, as well as some other water projects next year. Sewer projects, not a lot's on the docket in terms of firm projects. Sanitary Sewer Fund, so the next group of funds are the utilities. Nothing going on special there. Pretty much they're spending what they thought they were going to spend. A year ago, Common Council raised the sewer annual fee to collect the debt service on the $3 million so that when that debt service starts coming due next year, we'll have the resources to pay it out. There's a cash flow, there's a report on assets that's then there's also a similar set of statements for the water utility. Because it was a dry summer, we sold more water, we collected more resources. The water utility also has been spending money on a way to connect or continue for wholesale water service. So the water utility spent $100,000, more than $100,000 on some of those professional fees within last year, not all of which was budgeted. There's no other questions on that. I'm going to move over to the page 39 where we have the self-insurance fund. In this fund, we budgeted a small $55,000 deficit, which you see near the bottom of the leftmost column. In the 21 actual, you can see we've generated $130,000 surplus on $2.3 million in revenues. I'll call that pretty darn flat. The issue that my accounting manager asked me today, he says, are we going to have for December? We haven't decided on that yet, but I said there's no authorization to move the money out
We did decide on that.
Did we?
Because that's,
We're gonna-
yes,
we're gonna do
because that's what the budget said.
That's what the budget, so we're
If
gonna.
we wanted
we're
to do
gonna
something different, we would need a special.
Okay, so the question is, they need to do something either early in November to do that, or do it after the fact. We want to do that before.
That's the health premium.
Right, right. And then we talked about the OPEB trust. Page 40 is the OPEB trust current position. So here you see the 8.7 million in assets up at the top. And so far for the $100,000 surplus from revenues from insurance activity, you would expect this to normally have a deficit because you would expect the older employees that are in the retirement plan would have more health costs than active younger employees. They're just not. We've got a very small group, so you're going to see this thing bounce all over the place. They're just not. We've got a very small group, so you're going to see this thing bounce all over the place. Then we've also had $740,000 worth of unrealized gains this year, whereas last year through the end of September we were only sitting at 17. Been a very good year. Just the way the market. 17. Been a very good year. Just the way the markets. Keep in mind, if markets go down, this will go down because we're passively invested. I don't take any pats on the back, and I don't want to take any grief if it doesn't go right. Then we show on page 41 grief if it doesn't go right. Then we show on page 41 all of the other minor funds. Not a lot going on there. I'd point out fire department grants spent some money. They're waiting for the grants to come in. St. Martin's Fair Fund spent $26,000 more than we brought in. Health grants, we've spent $60,000. Generally, everything else is pretty balanced. I'd entertain any questions. I know I went through this in more detail in other months, but I think this is really the first opportunity Alderman Halfer's had a chance to see it, so I thought I would take that opportunity.
Any other questions on year-to-date after the 2021 results?
A motion to forward these to Common Council for acceptance.
So moved.
Second.
We have a motion and a second for station number. Any further discussion? Hearing none, all those in favor?
Aye.
Opposed?
Two items I think are things that I just wanted to share with you a little bit. Both of them are related to credit cards. The first item, item 9, I believe, is our, bank reconciliations is the next item.
Yes.
Whereas at the beginning of the year, our bank recs were quite far behind in getting done. I can tell you I reviewed all of the September bank reconciliations. So they are in balance. They are reconciled. We have very small net differences, but there are a lot of reconciling items. And I talked to Tom again today about you got to start getting those cleared off. And he's made a commitment to me to try and do it soon. He's told me that before top of him because Tom can procrastinate a little bit. But the accounts are reconciled, and there's very little reconciling net difference. I mean, it's just not a lot to get excited about. So because of the problem of it not being done earlier, I wanted to throw myself to your feet and ask your indulgences because it wasn't being. The review of the purchasing card program. We have two different types of credit card programs here that I wanted to talk about tonight. The first one is the purchasing card program. Back in 2015, Common Council, after multiple requests, approved the onboarding of a purchasing card program. What that means is we have issued to department heads credit cards in the city's name, so the city's liable for any of their use. Some of the department's heads have asked for their employees, some of their employees in their departments to also have cards. Some of the department's heads have asked for their employees, some of their employees in their departments to also have cards. All of the cards have a $3,500 credit limit, so it works just like your personal credit card. When you reach the limit, you're done. There is one party in the police department which regularly uses the card often, and we've increased that credit limit. There is one party in the police department which regularly uses the card often, and we've increased that credit limit to $5,000. The city does get a rebate back from U.S. Bank on this program. It's not amounted to a heck of a lot, so it's not a big deal. There is the possibility of issuing one-time cards. So, for instance, the city orders $175,000, $250,000 worth of salt. The salt vendor would take a credit card in payment if you wanted to use that. Salt vendor likes that because as soon as they charge the credit card, they get paid. We could that purchase with a 250, whatever limit is on the purchase order, and we give it to that vendor, they use it, but the city would get a rebate back on it. Same thing with police cars. We order $250,000 worth of police cars every year. Several of the local auto dealerships would take a credit card in payment. They would get paid, invoice us, we have to process it, to common council, 30, sometimes 45 days before they get their money. Credit card, they get it right after delivery. Administratively, there's costs associated with doing that. Since I'm the one who normally does that, I wouldn't recommend you do it soon, but you could consider expanding this program to snow plows, salt, police cars, one-time purchases of some larger nature. And so you get a 1% rebate back on all those purchases. So you had $1 million, you get $10,000 a year in revenue.
How much does it cost to issue a card?
They don't charge us for that. No, so that's how they're getting paid.
And the vendors are usually,
They're paying a merchant fee.
Yeah, 2-3% sometimes, and they're good with
Yeah.
that.
And
That's
they don't,
crazy.
they don't forward that fee on to,
Well, I'm sure it's in their pricing, but I know of multiple cities around the state that use a purchasing card program to pay for their salt,
okay.
for their police cars. But there is an administrative cost, and we are thinly staffed around City Hall. I don't know if anybody's noticed that. So be careful when you think about that one. But I wanted to come back and review that program, saying it's out there. I'm not asking for any action, and I've attached the resolution that was back in 2015, so you could see what that looks like.
What would the lead time be to do that? Somebody said, hey, we're getting near the salt purchase time. How long?
I would say it would take at least 60 days, maybe as many as 90 days to make it happen. Because you'd have to go to the bank and say, all right, we want to issue that. They'd have to set the program up. Council would have to approve a higher credit. Because you'd have to go to the bank and say, all right, we want to issue that. They'd have to set the program up. Council would have to approve a higher credit limit. And then somebody has to administratively do it. Depends on where you are. If you're in the middle of the audit, the last thing you want to do is spend an afternoon issuing 2 or 3 credit cards for one-time purchases.
Do they have to do purchase orders for something like that?
We do that anyway. It's a question of for one-time purchases.
Do they have to do purchase orders for something like that?
We do that anyway. It's a question of then we'd have to talk to the vendor. Would you accept a credit card for it? I know several of them that would. I don't know if every vendor would, but then you'd have to approach them and say, would you like to take this credit card? And it actually wouldn't even be a card. You'd give them the number, and it actually wouldn't even be a card. You'd give them the number. Here's the expiration date. They use it. It's done. When that purchase is done, they're done.
So most of those larger purchases are already planned anyway.
Right.
So you would be able to build the time in.
Right.
And the ordinance already.
But up to the smaller limit, the 3,500.
No, I think it's in, the one times are up to 150.
Yeah, we've never implemented that.
I know, we talked about it, but it's there.
It's there.
For those potential, but as you said, there is still some admin. Once you did a couple of them, if you like the salt, if you put every year, every other year, it becomes.
The program has saved us some administrative costs because there's a fair number of people around the city who use it for purchase from Amazon for a book of some kind or some special tool or whatever. So you, instead of $50 invoices that you have to cut a check for, you make one payment to the bank for a higher credit card. And somebody just gives us all their receipts for what they had. It does administratively reduce some of our costs for the small purchases. Any other questions on our purchasing program? The other program, this is the one, and I've got something I want to share with you. What I'm giving you right now is a report we get every single day from the credit card company. So this is where the city accepts credit cards in payment of invoices. We have not had an automated way to deal with that. So we, in the past, for all intents and purposes, really didn't accept credit cards in payment for any particular purpose. Now, I say that. The police accept credit cards if they pull somebody over and there's a bail payment outstanding or a warrant against that person. We'll take a credit card. We've been working with a credit card company called Allpaid, and They've guaranteed collection on all of it. If there's any chargebacks, they don't come back to the city, they eat that. But the fees are much higher. It's like 6% as a merchant fee, and that's paid by the person who uses the credit card. Okay? When credit card companies said they work with our software and could help us collect. Because our all-paid relationship was an exclusive relationship, it said we had to do all our credit card processing with them, and they did not support that interface. We said we're going to transition away from all-paid to 2 other vendors. So this is the one that we're using for utility payments, building permits, miscellaneous billings out of the finance office. The clerk's office will sometimes issue a bar permit, and somebody will want to pay for it with a credit card. They can walk over to Treasury and use that. So that's what you're seeing on this document. The most important document yesterday, from last Friday, and the top line item where it says auto pay, we have 1,600 utility customers who have given us authority to go into their bank account and pull out whatever their utility bill is. Prior to going to this particular vendor, we had 1,200 people on that. So we had 1,200 people on that. So within 9 months' time, we've added another, 400 utility customers who are using this process. It saves us a ton of time in the Treasury Department because we don't do anything. They do it all. They go to the bank department because we don't do anything. They do it all. They go to the bank, they submit the file, they pull the accounts, they apply it all electronically. We don't do anything. We used to have to do a lot of stuff for all of this. And we're getting, I want to say, 500 utility customers. I want to say 500 utility customers who use their credit card to pay utility bills. We didn't accept any credit cards for utility bills up until now. So it's been a real benefit in the Treasury Department. Now, we had tremendous problems with the bank reconciliation. We brought this on. Took us a long time to figure it out. We got to figure it out, and it's stable now. So that's working. We brought on a second credit card company to replace the one that the police had been using. That's been a nightmare. That vendor said not only do they work with our software system that the court uses to manage or maintain or track the fines and penalties that they issue. And it took 6 or 7 months for that. Even though they said they had an integration program, it took 6-7 months to get that integration to work. Turns out we gave them and they didn't know they had the wrong IP address, and it took them too long to figure that out. When they had it figured out, boom, it worked. They attached the guaranteed credit card collection rate of 6% to those transactions for the court, when they only should be at 2.5%. And so we've told the court, and the court doesn't want to use them. Then nightmare trying to get the credit card company to straighten that all out. But we're working on it. So what I wanted to just tell you is that we've implemented this credit card program last spring. On the utility side and the building permit side, I think things are going very well. We're getting positive. On the building permit side, I think things are going very well. We're getting positive feedback from people who want to use it. On the court side, that's been a tough implementation. Questions?
Who pays the fee on the utility? Who pays the fee on the utility?
There's a convenience fee charged, so the city's not incurring any costs. The Board of Water Commissioners would like us to pay the fee because they think there'll be even greater acceptance of the credit cards. But it's $2.95 for utility payment. $2.95 for utility payment, or 3% of the whichever's higher. I'm sorry, 2.5% or $3, whichever is higher.
So up to 33%.
And the people who are on this auto pay, even the credit card company's not charging us anything for that. So there's no charge to the property owner or the utility customer. There's no charge to the city for that. There's a process. We pay a fee of like $150 a month to have this whole process. So it's buried into that. And don't get me wrong, and there's always a fee someplace.
Drive up and drop it in the box, but he has to go to their office, whatever, empty that, sort it out, take it over to them, they gotta rip it open, make the bank, I mean, a lot of time spent with that, where integrated automatically.
I have anything other than I wanted to say to this group, it has been my pleasure to serve the city. Probably my last finance committee meeting with you guys. Maybe we'll have one in November, don't know. But I wanted to say thank you. It's been a pleasure to serve the citizens of this community and to work with you. I hope you have found my interaction to be both educational, informative, and transparent. That's been my goals.
You set a high bar.
Thank you, Paul. Thank you
Take
for
that.
everything you've done.
I take that as a compliment.
As it was meant.
You have an official date?
Wednesday, the 24th of November, so Tuesday, the 23rd. Not able to do a lot of follow-up after. And we have to come up, we don't have an agenda yet for that meeting. But you typically don't meet in November. And in January, there's usually not a lot for us to tell you because we're in transition. So not sure when this is going to come together after.
Does the group have a feeling? I'd like to have a November meeting, selfishly, because we can talk about October financials, perhaps get an OPEB update. And if there's no meeting in December, I'd like to have a November meeting, selfishly, because we can talk about October financials, perhaps get an OPEB update. And if there's no meeting in December, if we don't meet in November, we go from October all the way. And if there's no meeting in December, if we don't meet in November, we go from October all the way.
It is the Tuesday before Thanksgiving, which is scheduled. It is the Tuesday before Thanksgiving, which is scheduled.
And we're returning from Florida that week. We should know then the bond, finalization of the bond status as well.
Yes.
Well, yeah, I want to echo comment. All about professionalism. I just think when I'm active, this might sound odd, but I remember when the first ostracizing about that and how is that going to work, and the cows are there, and where are they going to go, and whatever.
Never gonna pay it off.
Yeah, and so
Now it's, if not the most successful business park in the state.
so those are just things that interest. The landfill's been occupant of ours, I guess. Yes, heard it's provided challenges and opportunities, of course. I think forward, but just so many things over the years. And as I look forward, I mean, what's our population projection? 5,000-6,000. Got a little ways to go yet. Got a little ways to go yet. Wow. So, look at some of the activity that's going on. And been a lot of balls to juggle and bounce. And I think the whole OPEB system, probably other than the state WRS program, I don't know too many communities in the state that probably close to have folks that live further south of here. Talk to them. Yeah. So anyway, that doesn't happen without a lot of attention to detail and cooperation. Sometimes I think municipal work gets, I want to say, evolving, and sometimes different personalities and backgrounds whatever. I mean, a lot of information, I think, that share, update, and sometimes it probably seems pretty repetitive, but I think citizens also. We have a motion to adjourn?
Second.
We have a motion and a second to adjourn. Any further discussion? Hearing none, all those in favor?
Aye.
Opposed?